Schwab. What a lightning bolt NVIDIA has been since April, and just all the turbulence around it. Even before April, the DeepSeek stuff is such like a back burner thing now. Dan Ives says this is going to be a $5 trillion company. What do you notice in the chart?
Well, I'll tell you what first, Diane, and good morning, by the way. We take a look at the shorter term here, and I think this really becomes kind of a portrait in resistance. And it's interesting because we can focus on the microcosm and we'll look a little bit at that larger group and that larger picture. But you see the stock trying to get through this resistance at 173 over the course of the last couple of days. And it's been making these very measured moves despite the exuberance. You get these big moves, but then it tests that resistance. And what it's doing right here at the 173 mark is exactly that over the course of Tuesday and yesterday and now today, trying to break through. Ultimately, with this pressure, you can see the ADX indicator down in the lower portion of that chart there. Above 25 is a strong uptrend. And so it hasn't really stayed up in that range for very long. It's tested, tested, tested. So you can maybe make the argument that investors are trying to chip away at this resistance level in the short term, Diane.
Okay, so trying to chip away at that level, that 173. I feel like, when you compare it to, like, say, football, it's like moving inches, right? So what do you notice when you look further out on the chart?
Well, the first thing that we look at this one-year daily chart is the fact that for the majority of this year, within kind of a broad oscillation between about that 91 level and up to this 153 resistance, this has been just a gently cycling stock. Again, I'm kind of downplaying the exuberance here because off of that April low, it has really been solidly to the upside. You see the RSI moving up into that overbought range, pressure to the upside, pushing and pushing. So then the question becomes for investors, where does it go from here when it's at all-time highs? And that's always a technical analysis challenge. So I put the Fibonacci retracements on here, extended that up to that 168.1 Fibonacci extension, and that puts that range out to around that 193 mark off of the 153 resistance. So that might be an answer, not a guarantee by any means, but it puts some context from a Fibonacci standpoint to how far this just phenomenally successful and lots of things lining up, TSMC earnings as well, kind of feeding into that potential if it breaks out of this 173 resistance here, Diane.
President Donald Trump is changing his stance on China once more. He is reducing the aggressive language 6 months into his second term in favor of what insiders describe as a more amiable stance. The change? Focus more on securing a speedy agreement and setting up a possible summit with President Xi, and less on destroying trade imbalances. Now, officials are considering extending the present tariff ceasefire by an additional 90 days when it expires on August 12th. Additionally, Trump now claims that the U.S. is battling China in a friendly manner following months of trade war hostility. Regarding markets, that is shorthand for immediate assistance, particularly for industries that have been hurt by previous tariff rounds. However, NVIDIA has emerged as this reset's surprising focal point. Despite previous promises to prevent any semiconductor technology from reaching Beijing, the administration secretly approved NVIDIA's return to exporting its H20 chips to China, a decision that caught many members of Trump's own staff off guard. Even while the processors are not as sophisticated as those found in NVIDIA's flagship devices, the reversal nonetheless caused concern. H20 limits were previously mentioned by Treasury Secretary Scott Bessent as evidence of U.S. determination. Right now, even Jensen Huang, the CEO of NVIDIA, is making a stronger argument for remaining in the Chinese market. According to sources, Trump's administration is beginning to embrace the idea that allowing NVIDIA to compete in China could be essential to winning the long-term AI race. Not everyone is on board, though. According to Commerce Secretary Howard Lutnick, some of the limits on chips were imposed not so much for national security reasons as to irritate China. In private, hawkish advisors are expressing worries that Trump might go farther, particularly if Xi exerts more pressure in future talks. The message to global industries and allies? U.S. policy is changing. What's off the table today might be back on the table tomorrow, in typical Trump fashion. For the time being, the main lesson is that markets are closely monitoring every move on the increasingly complex U.S.-China tech chessboard. After a weak start to 2025, NVIDIA's stock has recovered spectacularly during the last 3 months. After plunging to a 52-week low on April 7th, the chipmaker has risen an astounding 69% to become the world's first business to reach a $4 trillion market valuation. Given the remarkable growth NVIDIA has been continuously achieving due to the enormous demand for its artificial intelligence, AI processors, the stock's decline earlier in the year didn't appear reasonable. Thus, the company's subsequent surge isn't shocking. However, in light of NVIDIA's most recent surge, investors could be questioning if it is currently worthwhile to purchase additional shares of the company. Let's see what we can learn. The price of NVIDIA stock has increased over the last 3 or so months. The following chart makes this clear. In early April, when its trailing price-to-earnings (PE) ratio was in the mid-30s, significantly below its 5-year average earnings multiple of 70, investors were getting a tremendous deal on this rapidly expanding company. Even more alluring was the forward PE ratio of less than 25. As of this video, astute investors who purchased the chip giant's shares at that time are sitting on substantial returns, as the company was trading at a good discount to the tech-laden NASDAQ 100's average earnings multiple of 32 at the time. The good news is that, because of the several triggers it is sitting on, NVIDIA can still justify its high multiples and provide investors with more returns in the future. NVIDIA stands to gain from a number of multi-billion-dollar end markets, including AI processors, accelerated computing, cloud gaming, and corporate software, which might enable it to maintain steady growth for some time to come. So what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now, let's get back to the video. According to consensus projections, NVIDIA's revenue is expected to climb by 53% to about $200 billion in fiscal 2026. In the current fiscal year, a significant portion of the company's top line will come from its data center division, which generated 88% of its revenue in the previous quarter. In fiscal 2026, NVIDIA's data center division would generate $180 billion in revenue, assuming that it accounts for 90% of its total revenue. Compared to the prior fiscal year, that would represent a 56% rise. The enormous demand for NVIDIA's AI graphics processing units, GPUs, which are being installed in data centers for AI model training and inference, is the main driver of this strong increase. With a projected market share of 80% to 85%, NVIDIA is anticipated to continue to dominate the AI chip industry, according to Bank of America. Vivek Arya, an analyst at Bank of America, notes that NVIDIA's enormous client base and supply chain dominance will guarantee that the chipmaker maintains its position as the industry leader in this profitable sector. NVIDIA's data center business still has a lot of room to develop because of this. McKinsey estimates that by 2030, a staggering $5.2 trillion would be spent on AI data centers, with an additional $1.5 trillion going toward data centers that handle workloads unrelated to AI. Additionally, the consulting firm notes that the majority of this anticipated investment, 60%, will go to businesses that develop and produce computing hardware and semiconductors. After 5 years, that could put NVIDIA's potential revenue opportunity from data center chips at an incredible $4 trillion, which is significantly more than the firm is expected to make this fiscal year. Over the next 5 years, NVIDIA may experience exponential growth in the data center semiconductor market, which could propel its revenue skyrocket even if it loses market share to its competitors. The company's enterprise AI software solutions, which assist clients in developing AI agents and other applications in addition to managing their AI infrastructure to guarantee security and productivity, have been in high demand at the same time. As customers use NVIDIA's solutions to improve their AI models and create agentic AI applications, among other things, the company's enterprise revenue nearly doubled on a quarterly basis in February 2025, according to NVIDIA management. According to the company, clients are using its generative AI software platform to greatly improve the accuracy and speed of their large language models, LLMs, reaction times. It won't be shocking to see this business have a big impact on the company in the long run, as the enterprise AI market is predicted to bring in $104 billion by 2030. It would be wise for investors to look beyond valuation metrics and analyst projections because, despite its recent impressive revenue and earnings advances, NVIDIA appears to be at the start of an extraordinary growth curve. The market's expectations could be crushed by NVIDIA's enormous potential revenue opportunity, which could propel the AI stock's ascent to a valuation of up to $10 trillion within the next 5 years. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
It's so interesting because we have this going on, and at the same time, there's this big event expected in Pennsylvania. We've been getting little trickles of announcements out that various companies, including Google, are going to be spending more money on data centers and on power investments for those data centers. So when I want to get like a sort of a temperature check on the AI trade, I think of you. Kind of where are we in the cycle right now, and how should investors be thinking about it?
I would say the temperature is probably a little bit elevated right now, Julie. I mean, you think about AI over the last 2 years, it's felt like this sort of nonstop train where we've had increasingly impressive model releases from the large model building companies. We've had, to your point today, energy investments, companies building gigawatt investments in energy. Meta, as an example, right? Microsoft, Amazon, all of them are trying to make sure they have enough power for their systems and their chips. And so I think that we're going to continue to hear a lot of news about AI over the next 3 to 5 years. We still think we're in the midst of a 3 to 5 year bull market for the AI trade. To your question about temperature, though, I think if you think about that long term, think about 3 to 5 years, and we think AI has this kind of up and to the right trajectory. Along that trajectory, you will have times where you sort of undulate above and below that long-term trajectory. I think we're probably above that right now. So we are heated. We've had a lot of AI stocks up 100+% in the last few months. And so maybe it's time for things to cool down a little bit, but don't miss that long-term trade. That's the way that